Hey everyone, me Kevin here. A lot of folks are wondering, hey, if Donald Trump is now expected to be the president and the market, at least stock market futures were going up, why all of a sudden is the market going down? All the stock market future gains that there were have evaporated. Tesla went from nearly plus 3% to zero, if not negative. Nvidia's fallen from up to down. Why all of a sudden is everything flipping on its head? What has changed? And does any of this have to do with politics? Or does it have to do with Nike? Or does it have to do with something else? Well, the answer in this video. Let's get right into it. First, what I'd like to do is mention the following. If this election is truly about Biden versus Trump, and if we assume that a conservative is, at least in the short term, assumed to be better for the stock market, then yes, Trump should be leading the stock market to go up today. But why is Donald Trump's success in the debate yesterday not turning into a greener stock market? Why is Nvidia, as I'm recording this video, tanking, for example? We open the day with enthusiasm. Now it's losing all of its gains. Tesla, same thing. Gains at the open, broke 200, started falling. Bitcoin, the same thing. Lost the 61.7 level, keeps trying to go lower. What's going on? Well, in my opinion, the market yesterday in stock market futures said, okay, got it. No Biden, yes Trump. Good for markets. Stocks up. Then, okay, no Biden, that's gone. Okay, great. But what do we have to price in now? Wait, what if we get a Gavin Newsom? See, a Gavin Newsom would be a continuation of Democratic policies, of likely Newsom, or sorry, a Biden-esque style policies. Basically the same apparatus, the same Democratic White House with a different face, and quite frankly, somebody who's not senile. So now what you have is, oh, well, if they're going to replace Joe Biden, crap. Now, if we think Trump is good for the market, we have to now discount that, a Newsom could be a continuation of Biden. So that means we have to price in chances of Biden again and a little lower for Trump. And that's exactly what happened. See, Gavin Newsom went from about a 5-cent odd of, well, let's just look at the chart here. This is the 24-hour poll of Newsom right here. Newsom before the poll amongst Democrats went from about 9 and 8 cents to about 19 cents. Harris jumped from about 7 to about 17. So combined, you have this quadrupling of odds that you get either a Harris or a Newsom versus a Biden, right? Biden was at 85 cents. Now he's at 65 cents. This is predictit.org, by the way. You can also go over here to the Trump versus Joe Biden here, and you could see Gavin Newsom went from about 5 cents to about 13, higher than even where he was last night. So now all of a sudden markets are saying, okay, got it. If we're pricing in some of these other options, then there's a chance you have a continuation of Biden-esque style policies, in which case let's start selling off on the market some of that Donald Trump enthusiasm again. Now, no guarantees that that's what's going on, but that's possibly one answer. A second answer is what's called end of the quarter rebalancing and end of the month and end of the quarter profit taking. See, if you're a hedge fund, an ETF, or some kind of institutional money manager, it's really nice to do something known as locking in gains for your clients. Not because it's good for your tax strategy or the tax strategy of the clients, but rather it's bragging rights for your fund. Now, you could take some profits before a potential sell-off at the end of the day on the Friday, at the end of the month, and the end of the quarter, and then you could tell all your clients on your statement, it's okay, we sold higher, we beat the S&P, we beat the Qs, whatever is the logic that people use to try to sell their funds. Because realistically, when the next quarter starts, new clients for those funds are going to say, hey, what was your performance in the last quarter? What was your performance last month? And those answers will help determine how much money those folks get to make. So you have a lot of psychological reasons for the market to adjust right back down here. End of the month, end of the quarter, and then of course you've got this potential of, you have to price in a continuation of the Biden regime. Now, whether or not a Harris or Gavin Newsom would potentially be successful versus a Donald Trump is really a topic for a different video. Many of you will already know my opinion of Gavin Newsom because I ran against Gavin Newsom for governor. I think, and this was in the recall election, I think Gavin Newsom has quite frankly been terrible for California. There's no such thing as a balanced budget. In fact, to try to reduce inflation, they literally sent inflation reduction stimulus checks to people making up to $500,000. There is a level of mental, frankly, retardation that you need to think that makes any sense at all. So, sorry to use blunt words, but let's just say I'm not the biggest Newsom fan. In fact, I'll probably be the biggest thorn in Newsom's side if he ends up announcing that he is indeed going to step up to the plate. I don't think it is a plate America wants him on, but again, we could debate that. Instead, a lot of Democrats are also now saying, well, maybe we'll get a Jamie Dimon. Okay, I actually have a lot of respect for Jamie Dimon. I'm not saying he's perfect, but I have a lot of respect for him, where I don't for Newsom. Or maybe they'll pick somebody else. You know, who knows? Or they stick with Biden. If they stick with Biden, you have Trump for sure, right? In which case, market should go up. Okay, so those are a couple reasons. But what else is going on? Well, Nike sent a little bit of a warning shot, and it's worth thinking about what Nike is saying. Nike is amplifying what Cathie Wood told us at our symposium this weekend. We had an in-person event. Oh, it's coupon expiration, by the way, for the courses on building your wealth over at meetkevin.com. That expires tonight at 11:59 p.m. If you have questions, just email us at staff@meetkevin.com. We'll take care of you. There's also a mastermind. I think the price of that will go up as well. That's at meetkevin.com/mastermind. Anyway, you have to look at the negative sentiment for what's going on in Nike. Nike told you, we are spending more on advertising, but we expect sales to be down 10% next quarter. In addition to that, our margins are falling. Okay, that's bad. So you're less profitable. You're advertising more, which then reiterates becoming less profitable. You're less profitable on top of the fact that you're firing people, and you still think revenues are going to be down next quarter. And where you make about 44% of your revenue, which is their online direct-to-consumer section, you are substantially slowing down sales growth. The last thing any investor wants to hear is the reason they're investing in a company for growth is not growth anymore. It's kind of like, I mean, I know it's a sore subject. They will return to growth at some point. There will be a bottom at some point. In fact, I think we kind of already hit the Tesla bottom. But when Tesla lost its growth on electric vehicle sales, you had 3 years of pain in the stock. Now, I think that is behind us now. I think the trajectory is up. But today, on a volatile day, no guarantees that the day ends up green, okay? Today seems to be a little bit of a risk-off day, as measured by what I like to use, the leading omen that you're going to have a bad day, Bitcoin. Bitcoin told you 15 minutes after the market opened that today was going to suck. And that's kind of what you got. You got sell downs. You got a double sell down on Nvidia. You got the sell down on Tesla. You got the sell down on the Qs substantially. Bitcoin told you. And it told me too. Now, I have a problem where sometimes I don't listen to my own rules. And then what happens is there's this hand that appears and then it goes, ow, your boy Kevin just lost. In fact, we have a saying for that. It's right here. Tell me if you can hear this.
Your boy Kevin just lost lots of money.
Yeah, painful. That's okay, though. There are good days and there are bad days. The goal is to have more good days than bad days. And the day ain't over yet. Let's see what we can do to go make some tendies. Now, with that put out of the way, let's be very clear. Nike is a warning about cracks in the consumer and cracks that we might be trending towards a recession. So now what happens is you actually potentially go into an environment that is of a peak uncertainty. Because think about where you could be come October, which is traditionally when the markets sell off before an election. Number one, oh my gosh, we might be going into recession. Cracks in the consumer. Oh no, earnings and firings, oh no. Okay, that's number one. Number two, oh my gosh, interest rates, and I'm getting balloons now. Oh my gosh, interest rates are not coming down yet. That's bad. Okay, it doesn't help. So, cracks in the consumer, interest rates not coming down to save them yet. Okay, who's going to be president? Oh, it could be Newsom. It could be some continuation of Biden. Well, that doesn't mean it's a slam dunk that you get Trump, which is generally associated with a positive stock market return. Now, the reality is, like, real data-wise, I just want to be clear, real data-wise, once a president is picked, the stock market usually goes up. So, it doesn't really initially matter who gets picked. It's just like making the choice removes so much uncertainty. But the point is, think about this. Between now and the election, you're probably not going to have rate cuts. You're going to have more cracks in the consumer, and markets are still going to have to price in the risk of a not Trump. Again, I'm not trying to be political. I'm just saying that's generally how markets think. So if you're wondering, yo, what the hell just happened today? I thought today was going to be a good day. We had good PCE data, great inflation data. We had great consumer sentiment data from the University of Michigan. Better than expected, lower inflation expectations. The numbers were good. So what the hell? Well, again, it wasn't the data this morning that mattered. It was the pricing in of another president, the cracks in the consumer, and the level of uncertainty we have to price in, along with the fact that right now you are in an environment that says, oh boy, some of these earnings are not coming in that great. Now, as I film this, one of the reasons I've kind of been watching NVIDIA here is because I've got a delicious put option that I'm riding, and I'm kind of watching here right now. My P&L on that put option right now, if I were to close it right now, is about 22K. But I have a feeling, you could see it right here, position 1,000 contracts at 84, it's at 105. I don't know if it'll clear at that. But right now, it feels like things are getting a little bit more bearish. This has nothing to do with my video. I mean, I'm filming this and nobody's seeing this. You know, I don't control the market. I'm just trying to understand the market, and I try to give my perspective. That's my whole goal in life, is if I could give people perspective, great. So I like to send buy-sell alerts. And I like to send trend alerts when I see things. So for example, sometimes I'm bullish and then things go nasty. And then you know what? I swallow my ego, I swallow my pride, and I say, you know what? I think things are going bearish. I'm going to take an L on my calls, and I'm going to go for puts. And as you can see right now, oh, dang, it's up $48,000 right now. Holy crap. Oh, man. Oh, 52. No way. Oh, come on. Oh, come on. Oh, my gosh. I'm so tempted to do it. 56,000. Oh. Oh, my God. It keeps going. What? 66, 69,000? Oh my God, I feel like I'm gambling. I gotta push the button. Should I do it? Ah, push it. Oh, yes. Took profit on NVIDIA. Send that alert. Boom, baby. Yes. Let's go. That was sick. I can't believe that happened while I was filming. Oh my God. I feel like one of those like casino YouTubers. I just had a hedge on the market because I'm like, I don't know, things are going a little poopy right now. So anyway, like what I just typed out, those are the things I send to my course members. So again, your goal isn't, well, that you're going to get guaranteed profits. The goal isn't that you're going to get trades that you're going to copy. It's that you're like, okay, what the F is going on in the market? And then, okay, does Kevin have a perspective on this? And then you look and you go, yeah, that makes sense. I agree with that, or I disagree, right? That's the whole point of that. And so that's the Stocks and Psychology of Money course. You could join that, link down below at meetkevin.com. And yeah, wow, that was crazy. So anyway, thank you so much for watching this video. I really appreciate y'all. Good luck out there. And I'm thinking about putting, if you could help me, I need some comments down below, okay? I'm thinking about putting together a compilation on Gavin Newsom. So we'll make like sort of a compilation video for that. So if you want that, make sure you subscribe, hit the bell. Let me know what I should say in it. Just leave a comment down below, okay? All right, thank you so much, folks. We'll see you in the next one. Goodbye. Love y'all. See you.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than Househack, nor am I presently acting as a market maker. Make sure if you're considering investing in Househack to always read the PPM at househack.com.